What's going on today, YouTube? Today, I want to tell you how you yourself can beat the market in any mutual fund out there by picking your own stocks. At the end of this video, I'm going to reveal one of the stocks that I want you guys to do your own research on. I'm going to tell you how to do that, and leave in a comment below what you think this stock's going to do in the future, whether it's a good buy or stay away from it. This is going to get you one step closer to learning how to pick your own stocks and how to research them. If you want more of this content, I upload videos daily. So subscribe to my channel, leave a like, and share the video to get this information out to other people out there. Here are my 4 tips on how you yourself can beat the market. Number 1, buy low and sell high. And before you go away, I know everyone says this. I'm going to tell you the backing of how you can actually do this. I know you hear this from everyone. Everyone says buy low, sell high. That's how you're going to make money in the market. But everyone's like, yeah, well, if it was that easy, everyone would do it. So exactly, that's my point. So, the people with the greatest returns in the market are either A, mutual funds, or B, index funds. And I'm going to make another video in the future of why I prefer index funds over mutual funds. That's for another video. So, to understand how these guys play the market, mutual funds, they own the biggest, best companies out there. So do the indexes. The indexes just own more of a broad selection of stocks than these mutual funds do, because the mutual funds actively trade and try to figure out what stock is going to have the most gains or not. But the mutual funds are obligated to own companies such as Apple, Facebook, Johnson & Johnson, like the top companies in the world, because they can only own high-priced stocks. So they need to own these, and if these overperform, they'll look bad because they're like, why didn't they own the best stock on the stock market? So they have to own these. When index funds and big mutual funds own these companies, and say a mutual fund had a great return the previous year, so now they have a flood of more money and new investors coming into their company because they are going off their past returns. That drives the price of Apple, Facebook, everything way up. It gets way overextended. That is where buy low, sell high comes from. There comes to a point where every stock is just way overpriced for what its actual value is. So what I want you to do is look at well-known companies that have fallen to their year lows, and that is what the buy low is. As long as nothing happened in that company to make its assets drop, as in they aren't having as many sales anymore or so forth, that's when you need to buy the company. If everything remained the same and their stock price dropped, in a sense, this company is technically being ignored by the market and ignored by the big guys. And if the big guys don't own it, which I'm talking about mutual funds and index funds, their stock price falls because those mutual funds and indexes are the only ones that are going to move a stock, because they're investing that much money into it. Us investing a couple $1,000s is not going to move the price. I don't care what anyone tells you. That's not going to move the price. Not on companies that are worth billions of dollars. Number 2, buy quote-unquote growth stocks. These are companies that increase in capital value rather than high-yield income. So this goes back to the value investing principle. Look at its filings. I'll show you how to do that at the end. And you want to figure out if its assets overcome its liabilities and it's a profitable company. If it's a profitable company, they keep increasing in value, their stock price has to go up. Or, well, if it's not going up at the time, that means it is technically being ignored by everyone else in the rest of the world. Number 3 would be a bargain purchase. A bargain purchase is very hard to predict. But this is when, say we go into a bear market, which will eventually happen. Don't know when, no one knows when. Don't let anyone tell you they know when it's going to happen, because it's not true. They can predict 1,000 times, be right once, and then they're going to look like a genius, which is usually what happens on Wall Street. But okay, say we go into a bear market. At this bear market, companies get way, way, way underpriced. When they're underpriced, they become a bargain. So larger companies, to keep up their outstanding credentials, will buy these smaller companies. When they get bought out by a larger company, you, as a holder of the smaller company that was undervalued, that's why you bought it, either get offered shares of stock, your shares of your stock of the company that got bought out got transferred to shares of stock in the company that bought it. So say Apple by some little technology company, you get shares of Apple. I'm just using that as an example. You can use it works for anything. Or you get offered a straight cash value. And usually with the straight cash values, when they buy out a company, they buy a little more than their actual stock price. So that's how you make out. Number 4 is buying into special situations. There's a lot of them. I'm only going to cover one in this video. One of the special situations that I like, it's called a spinoff. A spinoff is when a portion of the larger company, say Apple, sells off a part of its company. Okay, so now that part of its company, it's going to have its own stock, it's going to be on its own index. Now, the big guys, index, and anytime I say big guys, I mean index mutual funds. Index and mutual funds. Index funds will sometimes ignore it because it goes off of their index. Say they're only focused in a certain index. They will no longer buy it and they will let it go. So hence, its price goes down. Same with mutual funds. A lot of the times they don't want to take the time to research this new company and figure out if it's actually going to be profitable. So they decide to just let the company go and they won't buy it. And they actually, well, let me go back a little bit. They actually sell it because when a company gets spun off of its larger company, you automatically own shares of that spin-off company because it was part of the company you were invested in. So they automatically have shares. It gets spun off. They sell all of their shares in that smaller company. So this smaller company's price drops down drastically. Now, it's not always just a good idea to go in and buy this. Like I said, never just buy the dip, quote unquote. This company could actually have no value, and that's why the larger company dropped it. Figure out if it has value and if it's being undervalued at that time, and its price should significantly increase. The reason I have Apple up on my screen right now, I want to tell you 2 things to avoid if you want to beat the market. Number 1, great example right here. I'm in different groups on Facebook and stuff, and I just watch what people talk about. A lot of people were like, earnings are coming out on Apple. They're supposed to have positive earnings, so I want to buy. This is the worst thing you can ever do. Example right here. It did have positive earnings. Look at that. $3.89. That's its earnings value right there at the bottom of the screen. And look, even back here, 207 positive earnings. This was even more. 207 reported earnings. Look at the stock. It rose drastically. This time, earnings were more than the last time. What I'm getting at, you don't know what's going to happen around earnings. Typically, most of the time, when a company has earnings, the stock price already resembles these earnings. This is again because people that set the prices of the market are not dumb people. They already know this is going to have positive earnings and where it's going to be. So, if this company misses earnings or does not exceed or get to its expectation, it will fall. And yes, I know there's going to be some people arguing out there, well, it's falling because the whole stock market's falling. True. Still, no matter what, do not buy around earnings. People bought up here because they want to get in before the earnings, and it dropped the whole way down to here. That's a 12% loss. And what? How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days? 12%? That's terrible. So never buy around earnings. Number 2, you can take this either way. Take this how you will. I just want to make you aware of it. Me and myself, I don't know whether to trust this or not, but it makes sense to me. Do not own any stock inside your own company. And yes, you can argue, if you work for it, why wouldn't you own shares in it? Which I completely understand. I completely agree. But sometimes when you work for a company, you're on the inside, you see things differently than the rest of the world sees them. Just because you work there and you think it's great, you see the inside, you go in every day, and you're making positive advances, it doesn't mean the rest of the world views that company the same way. You could almost, in a sense, be blinded by reality. So just be aware of that. That's all. Be aware. I'm not saying don't do it. I'm not saying do it. I just be aware of that is why they say don't own part of your company you work for, because you could be blinded by reality. Okay, and now for the end of the video. I want to show you guys a stock that's been dropping lately, and I want you guys to do your own research and tell me what you think. Alright, this is Ford. Everyone knows Ford, car company. It has significantly dropped. So what I want you guys to do is go into the SEC filings That's how you value stocks. I know it's hard, it's painful, and that's why a lot of people don't want to do it. But I want you to go in the SEC filings and figure out if this is a perfect case scenario that could be. I'm not telling you it is, I'm not telling you it isn't, because I will not ever tell you when to buy, when to sell, what to buy, what to sell. So I'm just going to tell you how to value it, what you can do, and you need to make your own decisions. That's how I want you guys to be. I don't want you guys to follow anyone else's opinions. You can listen to other people, as in taking their observation, taking their advice, and do your own research and decide if it's something you want to act on. But never just buy or sell something based on someone else's opinion. Why I see value. I told you, I'm a technical as well as a value trader. This is year, 6 month, we'll go to a year. This is at a year low, which is what I said in number 1. Look for stocks hitting their year low. Case in point, right here, 1050, it's at 1071, and it did drop down and hit that 1061 mark. I randomly put 1061 just because I wanted to catch it if it actually did hit this bottom, and I wanted to know before it was hitting that bottom. So that's why it's at 1061, just to clear that up. But the real resistance is at that 1050 mark. So now I'm going to show you guys real quick. This is www.sec.gov. This is where you can find all your SEC filings. I want you to go down a little bit, go down to company name, search in the company name. So we're using Ford for this example. You can type in a ticker, or make sure you get the right company. Because look, Ford, ticker, like you would think Ford is Ford, but no. Ford ticker is Forward Industries, Inc. Ford Motor Company is F. So just be cautious of that. Make sure you're looking at the right company. So go in here, you click search. I'm going to put my face over here. Now, you might be confused. Now, just don't be overwhelmed and confused. Filings. You can filter through whatever filing type you're looking for. But 8K filings. There's no set amount of how many of these come out per year or per month or per week or per day. But these are just things that happen inside a company, usually meetings and stuff that shareholders should know. If you own a share in that company, you should know about what's going on inside the company. So that's all those filings are. And 10Q, those are the quarterly reports. They are unaudited financial numbers. And 10K, these are the annual reports, and they have to be audited. This is the company's actual earnings, assets, liabilities, everything. So go here. Make sure you click on the full complete. See, it says complete 10K report. Go in there. You can do a find, type in something like assets, and you can look. It says for the years ending December 31st, 2014, 15, 16. Yeah, they don't have their 2017 up yet. But you just want to look at like total assets, net income. I want you to compare it year to year. See if this company's actually losing value, they're screwed up somewhere, or if they're just undervalued. They're being ignored right now. Like, another reason too, I know there's a lot of talk about like self-driving vehicles, and if Ford's not part of that, that could roll them out. So that could be a reason why they're dropping. But if their company's not losing value and you don't see, say, flying cars or self-driving cars any time soon to take over, you could get a quick return off of this. And right here, even this page right here, you can see total liabilities right here, total assets right here. Assets are good, liabilities are bad. Sum it up, easy. So that's it for this video. If you guys liked it, leave a like, subscribe to my channel, come out with this stuff daily. All I'm doing is trying to educate you and telling you stuff I wish I knew a long time ago, like when I was even 18. And that this would have been a huge help to me back then because I was so intimidated by the market. I don't want you guys to feel like that if you're over my age. It doesn't matter. You can start now. You can start anytime. Don't be afraid to start. If you are planning on investing for the next 20 years and you can beat the market for 20 years, or try to, or play it safe and go in an index fund, do you. But if you like this content, leave a like, leave a comment below, subscribe, and share this. I want to get this out there. The point of this channel is to help you. Stuff I wish I knew when I started. I'll see you guys tomorrow.